Welcome to today's auditing tutorial. In this lesson, we'll take a deep dive into PSA 315, specifically focusing on understanding the entity and its environment. This is crucial for risk assessment and effective audit planning. Whether you're a student or preparing for the CPA or for the CPA board exam, this will help you connect theory with practical application. So this is part of the series, Understanding the Entity, Its Environment, including its internal control and assessing the risks of material misstatement. Let's start with our learning objectives. By the end of this video, you should be able to explain how an auditor understands the client's business from its environment down to how its financial performance is measured. The first area we'll discuss is the external landscape. Auditors must consider industry-specific risk, economic factors, and compliance obligations. For example, a retail business faces different risks than a construction company. Also, the auditor must understand the financial reporting framework the entity uses, such as the Philippine Financial Reporting Standards. So, excuse me, I need to wear my eyeglasses. Okay. Let's look at examples. In banking industry, the Bangko Sentral ng Pilipinas, or BSP, imposes a capital adequacy requirements. In the construction industry, permits and environmental laws are big concerns. For pharma or pharmaceutical industry, regulation of drugs is paramount. So we need the FDA equivalent approval or IP rights. All of this influence risk of material misstatement. The second area is the nature of the entity. The auditor gathers knowledge about the client's organizational structure and ownership, the management style, and the accounting systems. So the auditor also gathers about the operations and business model, the governance and management, the accounting systems, internal control. It helps assess the internal control quality and audit risks. Example, the nature of the entity. So a software company defers revenue across the contract term, while a retailer needs strong inventory controls. The more you know about the entity, the better you understand where misstatements could occur. In the bank, for example, there's complex financial instruments. So you look at the valuation risk. For ito nga yung SaaS provider, ito yung mga software companies, no? Subscription model naman. So they are heavy on the deferred revenue, deferred contract cost naman to. Next, the auditor evaluates the entity's goals and how it plans to achieve them. Are they expanding too fast? Are they entering risky markets? So this assessment helps the auditor understand pressures that may lead to financial misstatement. Okay. Examples of business risk. Okay. If a company's strategy is to expand into international markets, it might face foreign exchange and compliance risk. An auditor must think, how might this impact the financial statements? Okay. So if there's a credit sales, there's an increase in credit sales, o yung mga, let's say, payment terms would be from the normal is 30 days, then you give the clients a payment terms of 60 or 90 days. Then there's a bad debt risk. There's a it's high likely that the customers might not pay. There could be some delay because maraming utang. So there's a highly likely na marami ding hindi magbayad. All right. Aggressive expansion. You expand. The problem here, not really the problem, the risk here is liquidity. When you say liquidity, your availability of cash. Okay. Lastly, we review how the entity tracks its own financial performance. This can reveal manipulation risks, especially when management bonuses depend on meeting KPIs. So KPIs, for example, yung mga profit margin, ROI, EBITDA, okay? For example, a consistent positive variance may suggest revenue inflation. So why it matters to the auditors? understanding the entity and its environment isn't just an academic exercise. It's central to audit planning. It helps auditors identify areas of risk early and focus audit procedures where they matter most. When you are going to engage, when you are going to enter an engagement, it's really important to know your customer. Your customer is your client, no? The company or the entity that you're going to audit. It's similar to a relationship. Now, when you enter a relationship, it's always good to know the other person. It could be a boyfriend or a girlfriend. So, of course, before you engage with someone, you get engaged with someone or you get married with someone, you have to know the person, ano ba yung career niya, ano yung mga motivations niya, and of course, the family background then. Okay? It's very important. We just don't get into a relationship without knowing the other person. It's similar with the auditor. We don't just engage with the client, we have to know the client so we know how to properly plan and mitigate the risk. Okay, let's wrap up with a quick recap. We've explored how external and internal factors guide the auditor's risk assessment process. All these insights lead to better audit quality. So we talk about industry regulations and framework. We talk about the nature of the entity. We also talk about objectives and risks. And we also talk about performance measurement. All right, now let's do a quick test. All right. Let's go to, okay. For question number 1, which of the following is considered an external factors affecting the audit? A, internal audit structure. B, ownership structure. C, regulatory environment. And D, budgeting procedures. You may pause this video now so you can think about it. Probably 10 seconds. Wala ako nung nag-timer. But probably in my next videos, I can put some timer. All right, the correct answer is letter C, regulatory environment. External factors include industry regulations and economic conditions. All right, let's go to number 2. What is the primary purpose of understanding the nature of the entity? A, to determine the audit fee. B, to prepare the audit report. C, to assess the risk of material statement. And D, to detect fraud. The correct answer is letter C, to assess the risk of material misstatement. So understanding the entity helps auditors plan procedures that respond to identified risks. Okay, let's go to question number 3. Which of the following is an example of a performance measure? A, company mission. B, number of employees. C, return on investment. And letter D, internal audit report. You may pause the video to think. Okay, the correct answer is letter C, return on investment. ROI is called ROI. It's a common KPI to evaluate financial performance. So question number 4. Why is it important to understand an entity's strategy? A, it helps identify related business risks. B, it determines depreciation methods. C, it affects the tax computation. And letter D, it is required by IFRS. Okay, you may pause the video to think. The correct answer is letter A. It helps identify related business risk. Strategies can create risk that lead to material business statements. Okay, let's go question number 5. Deferred revenue is most relevant in which type of business? A, retail. B, SaaS. C, construction. And D, banking. The correct answer is B, SaaS. SaaS companies recognize revenue over the subscription period. Okay. Now let's go to question number 6. What best describes a risk arising from a client entering a new market? A, compliance risk. B, internal control risk. C, business risk. And D, detection risk. Okay, you may pause the video to think. The correct answer is letter C, business risk. Business risks come from the entity's environment and strategies. Okay. Now let's go to question number 7. Which framework is used for financial reporting in the Philippines? Okay. A, US GAAP, B, IFRS only, C, Philippine Financial Reporting Standards, and D, COSO. Oh, this one is very obvious, no? Okay, the correct answer is letter C, of course, Philippine Financial Reporting Standards. Okay, let's go to question number 8. An unusually, remember the word unusual, high profit margin compared to industry average might indicate A, strong internal control, B, possible revenue manipulation, C, accurate forecasts, and D, strong management style. Okay, you may pause the video to think. The correct answer is letter B. There's possible revenue manipulation, okay? Because the question is unusually high profit margin. So probably, or possible, revenue manipulation. Because, why? Because the management KPI or their the management bonuses is based on high revenue, as either revenue or profit. Okay. Let's go to question number 9. Okay. Understanding industry conditions helps auditors select samples. A, letter B, identify inherent risks. C, recalculate taxes. And D, prepare financial statements. Pause the video to think. The correct answer is letter B, identify inherent risks. Certain industries carry unique inherent risks. Okay. I think this is the last question. Why would an auditor review a client's budget versus the actual reports? A, to prepare financials. B, to assess performance review methods. C, to determine fees. And D, to select the auditors. Okay, you may pause the video to think. The correct answer is letter B, to assess performance review methods. So variance analysis helps auditors identify red flags or management bias. All right, we're done with our tutorial. Thank you so much for your attention and participation today. So if you found this video really helpful, please give it a thumbs up, share it with your fellow students, and subscribe to our channel for more valuable content on accounting and auditing. Your support helps us create more resources like this. Thank you so much.